Well, the market had a big drop again this week. The question is it over or do we have more of a stock market crash coming? I'll explain what to look for and give you my thoughts on where the market is going, the opportunities, and the threats. All right, so let's start off this week by taking a look at the S&P 500. It was one of the worst months for the market in some time, I guess going back to when COVID first hit. But you always have to have some context. How far has the market gone down relative to the trend up? And so for that, we're going to take a look at the S&P chart, SPY. And let's do that here. We see on the daily, we've fallen from 460 down to 410. Now, the first thing that should stand out to you is that we have a low here right at the same price, and that will serve as support. Now, we had falling tops into this, so that's pessimistic. So in the very short term, we should bounce back. If I was to draw a line across these tops, that's our trend line. And the distance from the trend line down to where we are is quite far, and that means we're oversold, and therefore we should get a little bounce back in the short term. Now, that does not mean the worst is over. And for a bit better analysis, let's jump to the 3-year weekly chart. And here you can see a few problems. First of all, we talked about this when it happened, the break of the long-term upward trend line. And then in the last couple of weeks, I've talked about the breakdown from a falling top. And now on a closing basis on the weekly chart, we have fallen below. So although we have a glimmer of hope because we haven't penetrated the lows of February, we still need to be sort of pessimistic. Well, not even sort of pessimistic. We need to be very pessimistic because of this breakdown. Now, how far down can the market go? I think to help with that, what I like to do is take a look at a much longer term chart to see where that long-term area of support is. And for that, we're going to go to the max chart. And this gives us a monthly chart going back to 1995. And if I draw a linear trend line along those bottoms, and you can see how often it is held, and you can also see how far above it we are, I think it's a reasonable thing to expect the market to fall all the way down to that point. That is where support is. When markets run away from trend lines, they will typically come back. Now, I've never seen a situation like this where we are so far above the monthly trend line, but it is not unreasonable to think that that is support. Now let's do some more reasonable definition of support rather than the sky is falling type prognostication. So for that, I'm going to go to the 5-year chart, and actually I'm going to make this, we're going to do 5-year. And I guess the areas of support that I see here is in this old trading range, which is around 340. That's still a long ways down. So I want you to be pretty cautious. However, there are areas of the market that are doing well. So let's now look at how markets are interconnected with one another. So the first thing I'm going to take a look at is the main culprit in the market, which is the bond market. Because of course, investors are worried that with rising interest rates, you're going to see a pullback in the economy, and that's really the motivation for weakness in the stock market. So what we're going to start off with here is TBT, which is the inverse of the bond market. We're going to look at a 3-year weekly on this. And you can see that we are far above that trend line. So in other words, interest rates have gone up a little too quickly and deserve to come back a bit. And that could provide some stability for the market. You know, the market's priced in a lot of interest rate raises. And because it's been a bit of an emotional chase higher, we may see that pull back. Now, with rising interest rates in the US and the US bond market, that is supportive for the US dollar. And let me show you that. The ETF for the US dollar is UUP. And so this has also gone parabolically higher as the world wants to own US dollars because interest rates in the US are rising. They want to collect that extra income from the US bond market. And again, if we draw a trend line, which is the best little tool you have for this situation, we have gone parabolic up and away from the trend line, which means we're due for a pullback or even just a sideways move in the US dollar to get it back to the trend line. And that could be another stabilizing factor for the US stock market. Now, there are areas of strength. The US oil prices, despite strength in the US dollar, oil prices have been quite stable. Now, think about it this way. Here is the price of oil. It's more or less gone sideways in the last 3 or 4 months. However, the US dollar has been rising. So if you're someone in the world, in Europe or what have you, that is buying oil in US dollars, because that's how it trades, it's actually gotten more and more expensive. And if you are, let's say, a Canadian oil producer, you sell your oil in US dollars, you're getting more money for your oil, which is why when you look at the Canadian energy sector, T.XEG, you see that it continues to go higher even though the actual price of oil has been pretty stable the last few months. But again, if you're a Canadian oil producer, you're selling your oil in US dollars, you're getting that back. All right, now let's take a look at the NASDAQ, because that is one of the areas of bigger weakness because it went up so much, and we've seen some tumultuous earnings coming out in recent, this past week. Amazon had pretty bad earnings. Facebook or Meta did okay. But again, here's the upward trend line. You're now in a downward trend. You see the scores? They're really in the red, and they've been that way for a little while, ever since that upward trend line was broken. On a closing basis, this one has closed at new lows. Even on a not a closing basis, it's closed at new lows. We are a bit oversold, so in the short term, wouldn't be surprised if we get a little bounce back, but it might be a bit of a sucker rally. So if you see, stocks move up for a few days, don't think that it's over, because until we can break this downward trend line, it's not over. And ideally, it needs to break the downward trend line after the formation of a rising bottom. All right, so I've said that the market's oversold. What you then want to do if you're a short-term trader to trade that oversold market is to watch the intraday chart. So here is the 10-day, 30-minute chart. And what you need to see here is a break of this downward trend line from a rising bottom. So if we were to come up, hit it, build a rising bottom, and then break up through it, that would be a sign that we're going to get a little bounce back. It could last a few days, even a couple of weeks. But remember, that weekly chart is still weak. So in general, you want to be pretty cautious with the overall stock market. But commodities, the commodity sectors, particularly energy, is strong. So you can play in that sandbox. Let's take a look at gold, because gold is also priced in US dollars. And I think that's one of the reasons you've seen gold fall off this last couple of weeks, because the US dollar has gone down. Now, again, in real terms, if you're buying gold in US dollars, the value of the US dollar has gone up. Gold has gone down, but it's probably in US dollar terms not that bad if you are thinking about, if you live in another country, you got a bunch of gold in your pocket, you haven't really lost because the US dollar went up even though the price of gold went down. So it's kind of stagnant as well. All right, let's take a look at the Canadian market, because of course that is a market for commodity-based stocks. There's a heavy weighting of those. And you can see that it has outperformed the S&P. It's more or less been sideways. It's really a tale of two markets in Canada. You have the commodity-based sectors, again, primarily energy, that are moving up, while the rest of the market is moving down. So we can take a look at the financial sector, T.XFN, I believe is the symbol. Yes, there we go. And you can see that the banks in Canada have broken their upward trend line from a falling top. That means avoid Canadian banks, avoid many sectors in Canada. We talked about it last week. It's the commodity-based sectors that are doing well. Some of the dividend-paying stocks are okay because there's some stability in there, but generally I want you to be cautious with the Canadian market. Now, it is oversold also. There's your downward trend line. You're far below it. So you should see a bounce back in the short term. If you watch the 10-day, 30-minute chart, you can look for that break through some resistance from a rising bottom. If it can do that, we may get a little bit of a short-term bounce back, but you only want to be a trader on that. It's like a multi-day trade. Otherwise, I would be favoring shorting the market, but don't chase an emotional market lower. You want to short little blips of strength. So sell the rips, buy the dips. That's a good way to trade this market. All right, the last thing I want to take a look at before we wrap up, actually two more things, is the IWM, the small caps in the US, holding up better than the overall market. They've already suffered a lot. If you look at the average small cap stock, they've gone down a lot. And I think when money starts to come back into stocks, it may go to that small cap sector. A lot of capital has been in the large cap tech stocks. That money's coming out. Where's it going to land? I think people will look for some value, and they may find it in small cap because it hasn't, it's already gone down a lot, and the chart isn't as bad. Do I want to buy it tomorrow? No. When we look at this chart, you can see we need to break this downward trend line. We are moving down through support. We're just oversold. And if we can come back, build the rising bottom, and break that downward trend line, then it gets interesting. All right, I know many of you are interested in crypto, so let's take a quick look at Bitcoin. And what I'm showing you here is not Bitcoin. It's an ETF that's based on Bitcoin. GBTC is the symbol. And it is still in a relatively pessimistic pattern. You can see that it has falling tops. It's been going sideways for a while. But again, this Bitcoin is priced in US dollars. So if the US dollar is rising, when you have a Bitcoin and you sell it for, whatever, $20,000, $30,000 US, and the US dollar has risen and you're in Russia, well, you're actually not as bad off as it might seem with the chart. What I'm concerned about is if Bitcoin breaks this line of support here. It's testing it right now. And if it were to break down through it from a falling top, then we're going to test these lows, which is at about 22 on GBTC. Ethereum, another popular cryptocurrency, and it is in a similar situation where it's testing support. It's nearing it. It doesn't have the falling top like Bitcoin does, but I want you to be cautious with this as well. So that's a big overview of the market this week. I know that many of you may be rattled by what the market is doing. I think short term, decent chance we get a little bit of a bounce back. Longer term, I'm still quite pessimistic on most areas of the market. Commodities, okay, they've got great upward momentum, but they've kind of left the bus has left the station there in many instances. So you want to consider buying commodity stocks on weakness, on pullbacks. Don't chase it higher. Don't chase that parabolic trend. And overall in stocks, you want to either sit in cash or consider shorting, maybe buy really oversold dips down and then sell the 2 or 3 day bounce as it comes back. Hopefully that's been helpful for you. Make sure you click on the like button if you've enjoyed it, subscribe to the channel, turn those notifications on, and most importantly, trade well.